So our last speaker before the Q&A session is Markus Susilo. Markus is a partner at Crowe UAE, and he has over 17 years of experience in the professional service industry in the UAE. In the UAE, other GCC countries, and Western Europe. He is responsible for the consulting office of Crowe UAE in GMCC. Markus has supported numerous SMEs and multinational companies to establish, restructure, and manage the financial and legal compliance of their presence locally. Such compliances include international mobility, immigration services, payroll administration, international tax, indirect tax, and corporate services. Markus has coordinated numerous multi-jurisdiction tax compliance and tax structuring projects. In addition to being a tax service leader with Crowe UAE, he has also represents the Gulf region as a member of EMEA Tax Committee. He is trusted tax advisor to the commercial section of the Austrian Embassy in UAE. And now he is going to talk about the transfer pricing and its impact. Markus, please.
Okay, while waiting for the technology, the good part about the last speaker in any event, because, well, first of all, thank you very much for the ICAI Abu Dhabi for giving me this opportunity. But let me go back again. What the advantages of being the last speaker is that the previous speakers already give you all kind of information. So for me, it gets much easier. So it's just like a summary. And on top of that, the previous speakers also gave me completely new ideas of my presentation, which means that I need to use my cheat sheet as well. So if you don't mind, I will bring my mobile phone with me here. And these are the notes I have made. Because if I look at the previous speakers, you know, everybody seems to memorize everything. So I don't. And I just brought this printout. This is also partly of my cheat sheet, but also now I want to show to you as well that it's inspired by Umesh's earlier statement. I think you mentioned that there are 33 pages in the public consultation paper, and only one A4 about transfer pricing. Okay, both sides. So I don't know what does that mean, and I'm given also this topic transfer pricing. So does that mean that it is not important? I don't know, but I think you will need to make your own assessment and judgment as well once I'm done with my presentation. But if you would compare it to, I'm not sure how many of you here have seen the transfer pricing guidelines from the OECD, especially the one that has been issued in this year. Present? No? Okay, good. The book is this thick. And then if you count the case studies, because I believe Prateek mentioned a couple of interesting, let's say, landmark judgment on international taxation. But if you look at transfer pricing, again, I would say it's a new field within our profession, as you may know, in comparison to the other field. Let's put it this way. I mean, an accountant, for instance, has been there for many centuries, not decades. But transfer pricing, I think we're talking about, let's say, a couple of decades, 2 decades, that has been very relevant topic. And but the cases that have been, or the tax controversy that has been going on all over the world is maybe this thick if you would print out all of the cases, right? And I think this is something that I would expect going forward as well when it comes to tax controversy in the UAE. That would be very interesting to see. Now today my presentation would be about, just 1 second. Works? It's a great view, it just wants to be stuck there. No, it's fine because yeah, first of all we had our designer, and the first design that she gave us is a Dubai landscape. So I was like, no, I'm gonna give the presentation today in Abu Dhabi. So it has to be Abu Dhabi. So basically what I'm trying to say here is that transfer pricing is more art than science. I think you have heard of that statement. Even the OECD at some point in time just mentioned it. So what happened is that even with lengthy guidelines from the OECD in regards to the arm's length principle, I mean that is kind of like a buzzword and jargon, there is still a lot of discussion, and there's also quite some group of people also questioning whether arm's length principle is something that is still reasonable to actually determine what is the transaction between related party, right? Because at the end of the day, they're trying to say, okay, you know what, I mean, as you all might know, but let me just say it again. Arm's length principle is basically, you know, it's just if related parties are doing or having transaction with each other, it needs to be somehow priced in the same way as if the transaction would be done by within the third parties. But of course, the question here is that, and I will mention in a couple of paragraphs or slides going forward, is it very easy to find a representative or comparable within our region? Because that has been the biggest challenge, right? So how are you going to compare the transaction? How the tax authority is going to look at it? So this is something that, because at the end of the day, the transfer pricing is basically is a system that is created so that the government, going back to the concept from the OECD, is that government have a fair share of tax if it compares to the other jurisdiction, right? So what is a fair share of taxation? So this was always the question, and then today I will focus that question more on the transfer pricing. Now, this is what I'm going to discuss today. You know, we have already certain part of transfer pricing regulation in the UAE, so I'm going to touch upon that. I mean, as previous speaker also mentioned briefly, or let's say more broadly, about who will be impacted by the corporate tax. But I will mention here closely on the transfer pricing element, and I will go a bit details into what kind of transaction, and I will take that. I will use kind of our experience basically on this type of transactions within the UAE. So yes, I think the earlier speakers were saying like, okay, some companies are still waiting until the law is issued, and then they will then start let's say the initial impact assessment. But we also deal with a couple of multinationals who they are saying, look, you know what, we also already want to see this. So I'll take you through to some of the examples that we have had so far with the assignment that we already have. Some practical challenges that I would foresee. And of course, what is next for the businesses, right? Perfect, so yes, next one, please, thank you. So, recently I have an interaction with the IBFD. I'm not sure any of you knows about IBFD? No? Okay, well, this is one of the consultation body that actually work very closely with the OECD when it comes to the papers or any work that they are doing. Right, so they have a certification on the transfer pricing, let's say, a topic. And one of the slides that they mentioned is that, okay, in the UAE and Bahrain, they already have a very robust TP regulation. So of course I challenged them and I was like, okay guys, where is the transfer pricing regulation? And they're saying, oh sorry, it's actually not, it's just the CBCR. Right, the CBCR is part of BEPS number 13, BEPS action 13. But they're saying, okay, you know what, you got to report certain transaction. Now, this is currently only impacting a limited number of companies, the larger multinationals, right? But what we expect, and also it's mentioned in this two-pager document, is that going forward, what will happen is that when we have a corporate tax, so the UAE government would like to see, like, listen guys, look, you know what, there is a certain portion of tax that should stay in our country, So if you are going to somehow charge or being charged by your affiliated entities, you need to make sure that you know what, it is fair for us as a country. And I think someone mentioned also previous speakers about the concept of related party and connected person. So again, they are also saying, look, you know what, we don't have personal income tax. So of course there is a tricky part here. If I were the business owner, what I will do is that I'm just going to put everything as a management fee, salary, and anything else, right? So that it will go down to my profit below 375,000, which means that I do not pay tax. So they're saying, no, we want to see all of your documentation. So this will be the next step where we see like, okay, you will see requirement for master file and local file. And in some jurisdictions, we're not looking at only just, let's say, transfer pricing documentation that is only for cross-border transaction, but also within the country, there might be some requirement, especially that they say like, okay, you know what, we're going to make sure that the connected person is charging on an arm's length basis to the entity. Now, another thing that we expect to see is that there will be some other additional compliance like disclosure and other things that is also inspired by the other jurisdiction within the GCC. Because in KSA, for instance, the TP compliance regulation is already quite robust. At least the regulation is very robust, but implementation, another thing. And in Qatar also they have certain regulation, right? So this is something that we need to also look at it in terms of the compliance requirements. So don't look only on what the world is doing, but also look at our region. But then also they mentioned the TP regulation will be in line with the OECD TP guidelines. So maybe this is the reason why there's only 2 pages here, and then they will let you read the other guidelines. This thing. So please. Oh, by the way, so any of you who actually are interested in the TP subject, so if you have the older TP guidelines from 2017, so the OECD just issued 2022, there is some additional chapters over there, so you might want to have a look at that. Now it's working? Perfect. It is also working. The laser is working. Okay, so I'm going to go to the next point. Who will be impacted? Now, going back to, before I go further there, going back to our experience, I mean, again, we have a lot of multinational clients as well. So we see a lot of this cost plus transaction, especially when they have subsidiaries in the UAE, right? Because usually the entity within the UAE, it would be more of a, let's say, look at multinational structure, is that more of a, let's support function or more of a, let's say, trading entity to the other, to basically to the other affiliated entities outside the UAE, right? So currently the UAE, of course, saying, okay, whatever you do in terms of your cost plus margin or whatever it is, we do not want to know much. But going forward, what you will see is that the UAE will start looking at it and say like, okay, you know what, we also want to make sure that certain things stay in the country, as I said earlier. So what we see is that companies that are dealing with the other companies, affiliated company outside the UAE, this will be impacted quite heavily when it comes to transfer pricing, because you need to make sure that your local files are being prepared. Now, again, this is something that if you are not already, let's say, considering to look at, to start the preparation of these local files, is something that you might want to start thinking, okay, you know what, how should be the filing that you need to prepare as of next year or the year after next year, right? And another thing, I think the other two speakers were mentioning a bit about free zone and mainland. This is another complexity within our jurisdiction in the UAE. I mean, we're not talking only about Dubai, but we're talking also Abu Dhabi, because if I look at Abu Dhabi, you also have more and more free zones being enacted. Now, free zone in general will continue, at least according to the public consultation paper, is that the free zone will continue enjoying the tax holiday that has been promised, which means we will have a mismatch of tax rate just within a country. And of course, the government will want to say, okay, you know what, so if you are going to have a transaction with an affiliated entity that is located in the free zone with the mainland or mainland with the free zone, vice versa, that's why I say two sides here, then the transaction will have to be at arm's length. Now, the question is again here, what kind of comparable, what kind of database you can use, considering that the data in this country, especially financial data, is very confidential. So we'll see what happens. Now the next part is that from who I would go to the what. So which typical transactions here. So I'm going to focus further into, what you need to look at when it comes to your transaction. I don't want to go on the superficial. I'll go to the deeper. Now, the first one is entity financing, right? The way I've seen so far is that entities that are established in the UAE, whether it is part of a larger local group or part of a multinational entity, is that there has never been only one entity. There's always several entities. And the reason is always non-tax, because again, we do not have much taxation apart from VAT until now, but soon there might be a tax motivation to that restructuring, but so far, no. So what happened is that in the absence of taxation, so people have done it in let's say, in a business driven way of how they structure it. Now, for the first one is the financing, right? So usually when companies need money, the only thing is that, okay, the owner or the mother company or the affiliated entity will simply say like, you know what, we'll just give you advance and see what happens, and then if you can pay back at a later stage, you just pay back. Otherwise, we just leave it in the shareholder current account or any other current account. Now, going forward, when you have this kind of type of financing, right? First of all, you need to now start thinking, is it a loan or is it an equity? Right? Because these two things have completely different impact when it comes to the TP compliance. And especially with the loan, you need to make sure that there is an interest charged to it, and the interest needs to be at arm's length. And if I'm not mistaken, in one of the in the section of the, the consultation paper, they already disclosed, there is a certain level of allowable interest deduction. So that's something that you need to look at. Because usually a loan between affiliated entity, at least in this part of the world, not only there as well, sometimes also when we look at the multinationals, they do not consider the interest part. Right, another part that is very interesting is the cash pooling, especially if you have entities, free zone and non-free zone, and so on and so forth. So how are you going to start doing the cash pooling? And what sort of fee that will be charged by one entity to another? And what sort of method that we want to use? Because, for instance, recently there has been another, case law as well, where the tax authority just simply challenged, okay, you know what, this certain transaction is simply not comparable with the cash pooling arrangement, because cash pooling usually wouldn't be done by a third party, right? How can you? It's very difficult to find a comparable for cash pooling when it comes to the similar transactions that is going on in the third party environment. Now the second one is also very common, that is also in the UAE, is trading between affiliated entities. Right, so it's also going to be yeah.
Companies are going to be more complicated for holding companies in terms of the cash pooling and the loans to the subsidiaries.
Yes. So, sorry, the question is?
Holding companies.
Yes.
Is going to have more impact on this particular.
Yes. Yeah, I mean, let's go to the cash pooling, right? In the cash pooling, what happened is that sometimes the pool, the entity that is responsible for the pooling is not always the holding entity, right? So it can be also the other affiliated entity. And of course, the question is, why would you do that? And how would this entity be rewarded? Is it based on the advantage or benefit that is being gained by this by this entity, and then they would then basically use a profit split method, or there is another way to reward it, right? So this is where things get a bit more complicated, especially if you have the cash pooler is located, let's say, within a free zone. Now the question is that, okay, free zone, again, maybe or most probably exempted from the corporate tax. So what happened is that if I were the free zone entity, I say, okay, if I do cash pooling in the free zone for all of my mainland entity and the other entity, so please pay me fee because I'm providing service to my affiliated entities. Question is that how would that fee be calculated? So that the government of the UAE say, okay, actually this is not a superficial, it's still at arm's length. So that is where can be the complexity is. And of course the question would be, let me complicate the structure a bit further. Let's say you have the cash pooler that is located in the free zone, but then you have the holding company somewhere in the mainland, especially for local companies. Now the government will say like, okay, why you guys do not do it in the mainland, but why you're doing it in the free zone? There must be a reason. Because the reason may be, let's say if the cash pooling is done, let's take an example, ADGM, right? Which is a more, let's say, financial service-driven free zone. So it can be the case that, okay, there must be a tax motivation that why are you doing it in ADGM? So this is just one of the complexity that you will see going forward. I mean, due to limited of time, I mean, if you are interested, we can talk after this on this subject. Because there has been interesting, let's say, case law with this cash pooling that the tax authority just uprightly said, no, we don't accept that. The second one is, as I said earlier, on the trading between affiliated entity, whether it's goods or services. Right, especially for goods in the manufacturing entity, because what I've seen also with the local structure here is that you have certain entities that is producing one, the other one is doing manufacturing, and so on and so forth. And it might be the case that even the manufacturing or a certain function is being, let's say, conducted in the free zone, and then certain manufacturing is actually done in the onshore. And especially for local companies who are doing the exporting to Saudi, because I'm not sure whether you are all aware of the recent regulation rules of origin, where I'm quite busy working with Umesh on that. So it might be the case that certain manufacturing will still have to be kept in the mainland, and then certain function will be done in the free zone. So this is something that you might want to look at, whether compensation to the entities are at arm's length. The other one is, of course, the shared service center, combining your resources within mainland and free zone, because usually this will happen with the service industry, especially if you have, let's say, call centers in somewhere in the free zone, and then you have some operational entity within the mainland entity. So see how you want to reward that call center, for instance. Now the third one is actually quite common, at least what I've seen, again for service industry or even also for, let's say, manufacturing industry, is that certain function or certain human resources are actually located in one jurisdiction, but they are somehow responsible for the whole group. Now the whole group might be spread all over the UAE, including the free zone and non-free zone. The question is, how are you going to reward the individual, and how are you going to reward the entities that are actually hiring those people? Another thing to think about. Now the third one is, let's say, a very advanced concept of transfer pricing, which is on the intellectual property. I mean, it's quite interesting about I think 3 or 4 years ago, I got one query also for one of our clients, like, okay, you know what, is there an advantage to have the R&D in the UAE and then later on the exploiting entity somewhere else? I was like, okay, I mean, for us in the UAE, I mean, we don't have the taxation, so your question is too advanced for us to answer. Maybe you should ask it at a later stage. But now, once the corporate tax is introduced, we have transfer pricing. This is something that will need to be thought through. Now, I think someone, okay. Now, in the next one is, of course, I'm going to go further into the pragmatic, I would say, problems. Most people call it challenge, but I call it also problems. It's the first of all, as I said earlier, the lack of availability of comparable companies and transactions, especially within the region, right? So this is really something that needs to be the FTA should give further guidance on this part when they are issuing the law or implementing regulation, whichever it is. The other thing is that is also the problem globally, is the uncertainty of the arm's length value that will be applied by the FTA, and what you will think as arm's length as well. Because there might be the case that the FTA will introduce something similar to clarification concept where you can make an advance agreement with the FTA. I hope they will have, especially for a larger transaction. Because if not, then it will be there will be a lot of cases that relate to this agreement between the FTA and the taxpayer on how the arm's length value is achieved. The third one is, of course, the value chain monitoring, because again, going back to the concept of transfer pricing, you need to make sure that the price is very consistent with where the function is being performed, where the risk is being borne, or the ability to actually bear the risk of the transaction, and where asset is used or being contributed, right? These three aspects. So that would be another thing that you need to look at, and the value chain, and then price it properly. And again, there might be also a lot of dispute over there that the FTA might say, okay, you know what, guys, no, we think that pricing should be in this way because the function is performed over there. I think someone mentioned about the place management, the earlier speakers, right? So this is something that where the management function is, if you are going to charge management fee, for instance, and whether there is asset for that, and whether there is a certain risk that is being borne, and ability to bear the risk. The corporate tax differential between the countries. I mean, 9% is the lowest city. Okay, I mean 0% is basically the lowest corporate tax rate in the world, but we are the second one, which is 9%. 9% is the second lowest corporate tax, because when I was talking in the ACCA, they were asking like, okay, you know what, is 9% is the lowest? It's like, no. At that time I didn't do my research, so I did my research now. So 9% is the second lowest. So there would be a lot, still there will be a lot of issues, especially if you have transaction cross-border. There will be a lot of, I expect there will be a lot of challenges with the other tax authorities when it comes to this tax rate. The fourth one is the intercompany transaction, as I mentioned earlier. In terms of the financing, usually you do not have the documentation. Even when you have trading between affiliate entities, you also do not have this kind of, let's say, robust agreement. At least what I've seen so far. But going forward, this is something that you might want to look at. And maybe if you do your preliminary impact assessment, this is one of the things you might want to start with. Analyze the transaction with the affiliated entities. Make sure it is clear what you are buying, what you're selling with your affiliated entities. Right? Make sure that that activities that you said in the contract is performed in a certain entity is really performed, so it's not just superficial. Make sure that if there is asset mentioned in that agreement, the asset is really there. So I think Umesh mentioned a bit about this real estate, that one, let's say the owner still hold the real estate, someone else is doing the work, there's the real estate. Have a look at that and then document it. documentation. Because again, at the end of the day, transfer pricing is just a matter of documentation, because you are building a case, or you're building a defense document in case the tax authority is challenging your pricing. This is basically what transfer pricing compliance is all about. And the fifth one, just to connect it to the economic substance that you have, and the regulation that is already in the UAE. Again, going back to what the three aspects of transfer pricing, which is the asset, that you have really real substance. And I believe I read it somewhere in the consultation paper as well, that free zone, that one of the conditions for free zone to be exempted from the corporate tax is if they can exercise that they have sufficient substance, right? So this is something that you might want to look at, and this will be then linked to the transfer pricing, because at the end of the day, if you don't have enough substance, you will be challenged both from the corporate tax perspective, and also the government will say, look, you know what, we also want to look at your transfer pricing. So it might be a double impact. So what is next for companies? Part of it have been outlined by GIRISH. So I'm just going to add some more flavor on transfer pricing part. If you don't have any group policy, you might want to start developing one, transfer pricing policy. Evaluate your business model. So then later on, once the law is introduced, you will have the optimized amount of tax that you should pay, especially for entities with. Okay, there is another thing that GIRISH was mentioning as well, and I completely agree with you, is that the condition, at least for the grouping, for both VAT and corporate tax, are quite different, right? It might be the case that from the VAT perspective, you are within one group, so nobody cares how you do the transaction within the companies within the group, because it's out of scope of our VAT. But it might not be the case that once corporate tax is issued, then it can be the case that basically you cannot be grouped under one group, and then it will have certain adverse or potential adverse impact to your tax position. So have a look at it. Documentation, again I mentioned. Agreement, and then the evidence that the agreement is indeed reflecting the reality of your operation. So substance over form. And if you have any current transfer pricing, sorry, I think typo, transfer pricing policy, not pricing, transfer pricing policy, you might want to look at how the arm's length principle is, whether it's still applicable or not, especially from the UAE perspective, right? As I said in my previous example about the multinational entity, that they already have this cost plus arrangement. Question is that once the CT is introduced in the UAE, whether they can continue using that. And then of course, when the law is introduced, then basically you need to make sure that the documentation in terms of master file, local file, and any other disclosure form are actually kept up to date. So I think that's all from my side. I hope nobody falls asleep. Thank you very much.
Thank you, Markus. So it's a time to felicitate our speaker. And I would like to invite our PDC leader, Safiq, and PDC team member, Suma, and our senior member, BS Moni, on the stage to please hand over a token of appreciation to our speaker.